no one ever expected when we started that the total addressable market could be what it was. And I think many of our early investor conversations were the market's not big enough or it's too niche. And I just encourage anyone that wants to build a sustainable, profitable, healthy SaaS, just go after, start very focused. You can widen the aperture a little bit over time and seek and follow momentum when you see it. But that focus initially and maintaining that has led to where we are today, very profitable, sustainable, but also gives you, some defensibility and opportunity later down the track.
Hi everyone, I'm your host Rohit Bhargava, and you are listening to episode 165 of the Startup Playbook podcast, a weekly series where I sit down with successful tech founders, investors, and operators to unpack their journey, lessons, and insights to help current and future entrepreneurs. The voice that you heard a little bit earlier was that of Glenn Rogers, the co-founder and CEO of Float, and our guest for this episode. Glenn and his co-founder Lars started Float 11 years ago as a way to solve some of the resource management problems that they were seeing through their agency. They initially tried to raise VC funding but were rejected by every single investor that they spoke to, which led them to bootstrapping the business, initially as a side hustle for the first few years while they worked full-time. Float now employs over 40 people worldwide and has grown to $10 million in annual recurring revenue. In this episode, we dive into dealing with well-capitalized competitors, how to build effective remote-first cultures, the importance of constraints, and the evolution of the CEO role from a scrappy startup to a scale-up, and much more. One of my key takeaways from this episode is Glenn talking about the importance of professionalizing your approach and by surrounding yourself with the right people. And that's why I'm excited to partner with Sender. I run all of my personal and business accounting through them and can say from first-hand experience that they're more than just an accounting firm. They have a dedicated focus on founders, funders, and startups and can help you with everything from managing your taxes and balancing your books to even helping with your exit strategy. To find out more, head over to sender.com. Another key point through this episode was Glenn talking about building his own team and making sure that he has the right people for the right areas of the business so he can take a step back and focus on the bigger picture. And that's why I'm excited to partner with Dovetail Studios. On top of being a renowned product development partner for startups like Afterpay, they also operate a VC fund to invest in early-stage non-technical founders that go through their venture studio program. So if you're an early-stage non-technical founder looking for a team to help supercharge your growth, head over to dovetailstudios.com. And whether you decide to take external capital from investors or bootstrap your way to success, you'll want to make sure that you have the right legal infrastructure in place. LawPath's legal advice plan gives you access to lawyers on demand for one low monthly fee. You can create documents, sign online, and even have a lawyer on call to help with any legal issues at a fraction of the cost. They've helped save Australian businesses over $100 million in legal fees and are offering Startup Playbook listeners up to 20% off their most popular plan. To get access to this exclusive offer, head over to lawpath.com/playbook. With that out of the way, and without further ado, here is my interview with Glenn Rogers. Hi Glenn, welcome to the Startup Playbook podcast, and thanks so much for taking the time to be on the show today.
Pleasure. Thanks for the invite.
Not at all, Glenn. Sorry it's taken so long to get you on the show. We've known each other for a couple of years, but for the benefit of those people that maybe aren't as familiar with you and your background, do you want to share a little bit about your story and what got you here today?
Sure. And yes, good to connect on this. I've been looking forward to this one, Rohit. I'm Glenn Rogers, the CEO and co-founder of Float.com. We're the resource planning solution that helps teams keep track of who's working on what and when. We're a team of 45. We're across roughly 20 countries now, and fortunately around over 4,000 companies using Float. It's been a journey. It's been a journey of 11 years. I grew up here in Melbourne, spent some time in New York, where I founded Float with my now co-founder, Lars, and now I'm back here in Melbourne, and it's really exciting to get to this stage of sort of scale up with the Float journey.
Yeah, absolutely. And obviously, there's so many parts of your journey of the last 11 years with Float that I want to dive into. But one thing that, taking a step back, that I know that we've spoken about before is the experience that you had with Seek, early in your career, and how sort of formative that was for you when you kind of joined as, I think there was about 70 people or so in the company at that time. Do you mind sharing, what were some of the things that you sort of took away from that have helped you in your career, or specifically what you've been building at Float?
Absolutely. I think that was a very formative job for me, a role where I spent roughly 4 years. And for those not familiar, Seek being sort of Australia's #1 employment website, and they're post-IPO now, but at the time, very much pre-IPO, a rough sort of startup, I guess, down here in St Kilda. one of my first jobs out of university, and so fortuitous that I landed there because it taught me so much just about the ambition of creation. Like building something out of nothing, not having everything figured out, but the motivation to sort of succeed in a new market and disrupt what were incumbents at the time, the newspaper industry. Some incredible people formed part of that alumni, and I feel lucky to call many of them still friends now. But that sort of curiosity, that passion, that ability to make the rules up as they went, and really go for it, is something I carry with me today. And again, you look at the folks that went on from there: Paul Bassett now running Square Peg, Andrew with Seek and his investments. Yeah, it's an incredible story and something that inspires me with Float today.
Yeah, absolutely. And obviously we've had Paul Bassett from Seek on the podcast. I think it was 4 or 5 years ago now. And, it's incredible just even within the last 4 or 5 years, what SquarePeg has continued to do in terms of leading the way with VC in Australia. And Glenn, sort of shifting gears to Float as well, I think that you also have a sort of interesting journey with how you and Lars first came together, starting the company with both of you working on, essentially the same problem independently and coming together while you were both working together at Razorfish. Do you want to share a little bit about, I guess, the origin story behind Float?
Absolutely, yeah. As I mentioned, when I finished uni, I had a major in advertising. Unfortunately, after my experience at Seek, moved into advertising and had that experience here in Melbourne before moving to New York, where it was very much a home for advertising. I had roughly sort of 6 to 8 years experience there in advertising, and it was there at an agency called Razorfish, just right in the middle of Times Square there. Real traditional digital agency that was over 300 people, was where I guess the problem for Float really became obvious to me. I'd worked at prior agencies where I'd seen this pattern of, hey, look, we've got 300 people and just as many active projects and clients. How are we actually planning what everyone's working on, or how are we allocating their time? We've got time off. What's the solution to that? And so often that solution was something they either hacked together or a spreadsheet. And we'd have people that were just involved in managing that spreadsheet. That was their job, which was, to me, it was madness. And I thought, look, there had to be a better way. This is 11 years ago. I think I was inspired by what we saw happening with, say, Basecamp and some of those SaaS 2.0 companies all shifting to the cloud. You could see that was where the park was moving. And so as someone with a background in user experience, started to wireframe up this potential solution. And I knew from previous efforts in trying to start a company that I wanted a technical co-founder, someone that was in it with me on this journey. And so reached out to Lars, who I'd worked with on a couple of campaigns at that agency. He was a technical director there at the time. And it just clicked straight away. He knew the problem I was trying to solve. He'd actually been solving it for another client or another contact he'd had in the past. And from there, we sort of hit the ground running. We were very aligned in what we're out to achieve.
Yeah, and from what I understand, it very much started off as a side hustle for both of you in terms of having a full-time job while continuing to build this on the side. What was that sort of inflection point for both you and Lars in deciding to go full-time in the business?
Sure, yeah. Look, and here's the thing. It was 11 years ago. I was just in my 30s. Lars, he just had a child. I think for us, there was that risk tolerance, right? We weren't willing to just drop everything, and particularly in New York, with the cost of living so high, and see if this thing works out. I mean, SaaS is a long journey to profitability. We knew that. So we thought, let's see how far we can take this as a side hustle and really prove out and validate the problem. Now that took probably a lot longer than we ever expected. I think it was 4 or 5 years before we felt we were ready to go all in. But we knew by that stage there was enough proof points, and we're excited by that prospect. And again, our risk tolerance our risk was a lot lower by that point.
Yeah, and obviously, I think so much of Float's, journey has been kind of based on bootstrapping and obviously building an incredible business on track to do 10 mil ARR, I believe. But I remember a conversation that you and I had, this would have been probably 4 or 5 years ago when we were walking to the co-working space that you were working out of at that time. And you were talking about, actually that wasn't the original plan, and that you were, trying to raise capital, but, things didn't quite work out. Do you want to share a little bit of some of that sort of early experience in terms of, trying to raise venture for Float and, how that sort of did or didn't affect your strategy moving forward?
Absolutely. Good memory, Rohit. But yes, and look, I like to share this because I think it's important that folks know that like we did seek finance, we did seek ways to scale earlier. We went through even in those early stages a sort of Techstars accelerator process where we could seek out both funding but also support, and we didn't get there. In fact, we got to the final stages. I still remember this meeting room we were thrown into at Bryant Park in New York with 20 sort of faceless people we didn't know who they were, and presenting to a group and realizing again we weren't a fit. We got a lot of rejection early on about an idea that was again didn't it felt too niche or it didn't feel like we could scale it. We were the team, and that was tough. But we progressed. We pushed forward. I think SaaS, we're very fortunate today, and even 11 years ago, you can do so with relatively low cost, relatively low investment. So we did. We marched on, and at each step, we'd revisit our options. We'd speak to people. We'd seek out advice on potential funding rounds. But I mean, we essentially got through to profitability with roughly 30K of our own investment. And I look back on that and smile and think, well, great, how lucky in hindsight that we were able to and maintain our equity and our the leverage we have today. But that certainly wasn't the plan from day one.
I think it's really critical what you sort of mentioned in terms of not quite being the right fit as well, and just because you get no from VCs or from angels doesn't necessarily mean that you don't have a great business that's there. But I guess really curious to sort of understand from, I guess, not taking on, venture capital or external financing early in the business, how do you think that shaped the way that you approached not just building the business, but also, your kind of product strategy and the types of problems that you were going after?
Yeah, I think again, fortuitous, and I feel very lucky to have had that opportunity to do this to this point, bootstrapped. Partly because it forces so many constraints in how you think, in the features you bet on, again in the people you hire. You're dealing with both your own money, but also a very short runway, and every one of those decisions matters. You also get very good at unit economics, and you really get focused on profitability early on. And I think that's just a great mindset for you to carry with you today. I still take a lot of those lessons that I learned early on in how I think about growth today, 11 years on. And again, the further you can go along that path, the more leverage you build up, whether you have those conversations later at a later stage with VCs or investors, you have, again, a more solid business and more fundamentals in place. So you can pull that trigger when you're ready.
Diving into that a little bit deeper, do you mind sharing, when you talk about sort of the unit economics and sort of being really tied to a sort of outcomes-based sort of approach with how you decide to grow the business, what does that sort of operationally look like when you decide to add new features or kind of, look at expanding the business?
Yeah, look, for us, it really meant that our entire focus became about the product, building a product that people would love and were willing to pay for it, because that's ultimately what would keep us alive. We didn't spend a cent on marketing, I think, in those first 4 or 5 years. We didn't know much about it, to be honest. But it meant that we were spending, again, almost entirely our focus on how do we make this product better? How do we iterate on it? How do we get the best engineers to think about this and work on it with us? And I think by far that got our product, 4 or 5 years into that point where, again, we'll hit that product market fit inflection point without a lot of distraction. We weren't raising, we weren't looking to come up with marketing strategies or things that would divert both mine and Lars' attention. We focused on what mattered at the end of the day, which, again, for our customers was about a great product that helped them plan their time.
I guess in the position when you're in a bootstrap company and you're sort of reinvesting back the profits that you make from the company, there's less capital generally to kind of work with, and sort of probably less of a focus on growth compared to when you raise VC funding. So curious to sort of understand how you sort of find that balance, or what is the approach that you take in terms of finding that balance between short and long-term growth?
Yeah, it's a great question, because I think particularly as you evolve over the course of that period, there's just more opportunities, more things you could be doing, more products you could be building, or more features you could be adding. And I think that kills many SaaS in particular. So for us, it was about really, and for my role in particular as a CEO, is saying, what are we and what are we not as a product? and then really doubling down on the things we are and that we can defend and build a moat around. For us, that was resource planning and say avoiding the trap of trying to be project management tools as well, or trying to be invoicing as well. I think we really knew our sweet spot, and even being quite specific about our audience. Like, we're pretty niche, right? Like, we knew advertising agencies, so we built for advertising agencies. That was quite a niche at the time, and that enabled us though to get really focused about the problem we're solving, so that when it came to feature prioritization, we knew what our customers wanted because we knew those customers really well, and we knew what we weren't going to build, which made, again, the prioritization a lot easier.
Yeah, absolutely. It's fascinating you kind of mentioning the focus. So I've had you referenced DHH from Basecamp, and also Nick Franklin from Chart Mogul, who have both been previous guests of the podcast. Obviously built incredible businesses, mainly from a bootstrapped approach. One of the things that they both mentioned was the temptation to add new features and expand really quickly, and one of the core parts of their success has been really being hyper focused on that. Personally, I find that really challenging, and I know that a lot of other startup founders find that similarly challenging as well. Do you have any advice on, how you sort of remain or kind of retain that focus when you have all of those bright lights of kind of new features or new things that you might be able to expand to, especially considering, how much more competition that there is now in the market compared to when you first launched?
Yeah, and look, we fell into this trap. If I'm speaking openly, I think our first product was resource planning, but also a CRM. We had like fields for two phone numbers, and we thought we're going to be, I guess, the CRM for agencies as well. So it comes from that experience and building the wrong things, and then realizing that that's a huge cost to you. It dilutes your focus, but also you need to maintain those features. So it's so critical you get that right. And then I guess over time, yeah, that focus pays off in the feedback loops you get. You get folks choosing you for that very specific reason. If I could give any advice, I think no one ever expected when we started that the total addressable market could be what it was. And I think many of our early investor conversations were the market's not big enough or it's too niche. And I just encourage anyone that wants to build a sustainable, profitable, healthy SaaS, just go after, start very focused. You can widen the aperture a little bit over time, and seek and follow momentum when you see it. But that focus initially and maintaining that has led to where we are today, very profitable, sustainable, but also gives you, again, some defensibility and opportunity later down the track.
Yeah, and I guess on a more personal level as well. As a founder, when you see competitors launching in a growing market with a lot more capital and a lot more competition launching as well, how do you sort of keep yourself as well as your team on track and kind of motivated in the same way?
Yeah, and I think, I mean, a good example is the project management space that has just been taking up so much oxygen of late, and particularly in marketing. Like they are trying to literally be, the one tool that replaces every tool, and so we see a lot of that. And we're aware of it. We keep our eye on it. But I think what you underestimate is 11 years of focusing on a problem and really building, domain expertise around that problem. People can't just turn on and replicate those features when you've thought about that problem for so long and iterated. We launch every 6 weeks and every 2 weeks after that. And that's an amazing amount of incremental improvement in a product that, again, can, when you get to this point, be defended, and you should feel like if you do that, you have that level of, defensibility when there's new competition or an evolution in the space, and which we have seen, particularly over the past few years.
Yeah. And, going back to that conversation from, 4 or 5 years ago now, one of the other things that sort of, I remember sticking out to me was when you first told me that you were a remote first company. And, now sort of post COVID, that's, a much more common way of operating, and pretty much every business has had to do that in some form. But, you've been sort of remote first from day one of the company. Do you want to share, I guess, even first strategically, what was that decision, or what was that kind of reason behind being remote first?
Yeah, look, I mean, at the time we founded Float, we were both in New York. We were trying to hire engineers, and that was a really tricky combination. And so by default, we started seeking folks outside of New York, and and they were very productive. Working situations. We were working nights and evenings or weekends. They were in different locations, but it was productive, and we're able to get a product out and then further iterate on it. So it started to become a process that was working for us, and we just continue to expand on that. We'd seek further engineers outside of the US. We'd seek different skill sets in different countries, and I think over time we got pretty good at it. And ironically, like it was something that was frowned upon when we'd speak to investors about this, that we'd had managed to build a team outside of New York. They thought, no, if there's not a head office, it can't be done. If there's not a centralized place of meeting, that can't be done. If I can't walk the halls, it can't be done. And now, obviously, we've seen that script change, and certainly the value of remote proven out again and again. Over 70% of the customers we have now are all working remote. So I believe it's become our superpower in a sense of understanding and having empathy for how they work and what's important to them in a centralized planning tool. It's been an evolution, but it's something I think I'm really proud we made that choice early on, and we've become quite good at 11 years in.
Yeah, in terms of being quite good at it, a lot of businesses have had to almost bake in the sort of remote environment and try and shift their culture from what it was like at the office to try and replicate that online. For someone who's been doing this for 11 years now, do you have any advice in terms of how can you effectively build and create that culture in a remote environment?
Absolutely. And I think you use the word replicate the office. I'll use the word replicate. And I think that's what far too many are trying to do. They're trying to take what they did in the office, the 9 to 5, always in meetings, and drop that into a remote environment, which just does not work. It's exhausting. If you've tried to do many have now been exhausted by those Zoom calls. It just doesn't work. And so for us, it's quite the opposite. I think what we've come to accept too is that we're trying to build in enough sort of light touch rituals that enable us to come together, build trust, but we're not trying to build a sort of social life into Float, which I think, again, with so many office environments and certainly my time in advertising, it was all encompassing. It was your work, it was your life. After work, you'd all go for drinks. That's not what Float's about. I think we do work. We're really proud and get energy from who we work with and the work we produce. But then we go home and we switch off and we go, I hang out with my 3-year-old daughter, and we build a system that's more flexible so that we're not expected to be online at the same time, that we're not expected to have sync calls on every decision point. We focus incredibly on our documentation and processes so that you don't need to learn by standing over someone's shoulder. You can read the Notion documentation. You can watch, and when I say documentation, it shouldn't always be written either. I think Loom has been so instrumental for us in having async videos, so we can share thoughts just like this video, and have that sort of face-to-face connection. But again, async, and then probably the other thing that async or remote first has done is just enable us to get really first, we have very few meetings, so we can have a lot of time for deep thought, but then you can really put a lot of consideration into your opinions and views. I think far too many particular meetings and sync time is spent on sort of off-the-cuff thoughts or very ill-conceived sort of opinions, when really if you spent some 2-3 hours really thinking about the problem, sharing that thought, and then coming together to debate your opinions and differences, that's far more powerful and such a better outcome for everyone involved. And it's quite energizing. The sync times we do have, they're fiery, and like we can really come into it because we've got a strong opinion we've thought about, and I value those immensely.
Yeah, one of the other people that I spoke to as part of the research process for this interview was Siobhan, who heads up your marketing. She mentioned that she's got 4 direct reports, but she has probably 1.5 to 2 hours max of meetings per week. But there's still a really high, incredible level of trust that kind of gets translated across the team. You've mentioned some of the things around sort of documentation and those sorts of things, but is there anything that you do in terms of helping build that connection and build that trust between your team members?
Yeah, shout out to Siobhan. I mean, she's been through this journey over the past 3 years with us, and certainly contributed to that culture. I think everyone has over these recent years. Look, it is about, honestly, trust is so fundamental to all of this. I think so many flaws in the office was about that lack of trust, around that idea you had to be over their shoulder or in that meeting to come together on a decision. I think if you start with this level of trust and understanding that they're going to do the job, and if you set the vision and you set the goals and you're aligning those goals, that people can achieve incredible things with so much autonomy that doesn't require those sync times. That's very rewarding, and it feeds itself because you see folks with that freedom producing the work. And again, I don't think necessarily it's for everyone. I think that idea that those few meetings a week, for us is empowering, and we all thrive in that environment. Some don't, and I think we try our best to be very transparent that this is how we work, this is why we work, and set those expectations early on, so that folks can make those decisions if they're considering working at Float.
Yeah, and one of the things that Siobhan mentioned is one of your superpower, and something that she sort of continues to learn from you is just your ability to kind of balance that almost the tension between being hands-on and things like that, especially from the early days of the business, to letting go and being a bit more hands-off, especially as you're trying to focus on building that team around you. Do you want to share, for anyone that's listening that's kind of going through that process at the moment in terms of, again, systems or processes, or how you approach that when you bring new team members on?
Right on. And I think this is honestly, as a personal challenge, been the hardest. I think when you start a startup, you so much about, particularly a product like Float, a B2B SaaS, my focus is almost 100% entirely on that product and how that product works and why it works, and chatting with the customer and really involving myself in every decision. And then over time, you realize that's not scalable, and that doesn't build a company. And so making that transition to where my focus now is on the company as a product and the people that work within it, and setting them up for success. That's a journey I'm still on, and I think I'm learning a lot, and I don't always get that part right either. I still love getting into the product and tinkering, and again, at times where it's probably best I don't, and you build that trust and encouragement in others to make those decisions, and support them in that. But above all, I think, again, the best advice that I can give in those situations is sort of be the bar for quality, or set what you're willing to tolerate, or set what you expect of this, of the role or the company. And if you set that bar, that's it, that's where the bar is, and you'll know when you're hitting it, and you'll know when you're not. And that starts to form the culture that perhaps Siobhan's talking about here, of where we expect work to be delivered at, and how we operate.
And speaking of product, Lars mentioned that you've only recently hired a head of product on board, but for the majority of the last 11 years, you've been managing the product side of things. And it's really interesting kind of seeing the correlation between that and my chat with Nick Franklin from Chartmogul as well, where very similarly, he's still the CEO, but also is very closely aligned and still sort of heads up the product arm of the business. How important is it for you as a CEO of a bootstrap company to be that close, or kind of being that responsible for the product side of things?
Yeah, look, I think fundamentally, like the product is why we exist, and it's what's keeping our customers happy, and it enables us to do what we do. So I think ensuring we're continuing to deliver on that proposition of who we are and why we exist has been so critical, and it is in any product-led growth company. So I take that seriously. I think I'm really proud that we've got folks now on the team that can do that, particularly the current team and those we're bringing on now, and particularly this head of product. And so my role will shift, and I think I'll still, while continue to remain curious and passionate about that problem, put the trust in others to be doing that and driving the path forward tomorrow. But I'm a big fan of any company where the founder, or at least those early stage employees, were on the product side, because you can feel it, you can see it in the product. You can start a trial and know that someone's put a real lot of thought into every edge and every experience. And people make choices based on that. People make choices based on how something feels, the desirability of that product, the design of that product. And that was some, again, so many hours in those first few years were spent on discussing, debating, and crafting that experience.
And going back to Lars, one of the things that he mentioned was that, aside from your background as a DJ, which I didn't know about, and I might need to talk to you about that over a drink at some stage. But, one of the things that he sort of mentioned in terms of, like your superpower as a founder is just your kind of business savvy and almost your ability to know, what are the right sort of moves to make from a business perspective. Obviously, you mentioned, a little bit earlier that you don't always get it right. And part of that process is learning as well. For someone who's kind of operating a bootstrap business that, maybe doesn't have the resources to really sort of devote into particular areas, again, like how do you find that right balance between just kind of, remaining and kind of retaining that focus, but also just making sure that you give enough time for new experiments to really play out to see whether that's something that will be worthwhile and worth investing more in, or when you need to cut those short?
Yeah, and thank you, Lars. Look, I do think so much of what's great about building a startup is you get this opportunity to learn what it takes to grow both a product and then a team. And look, speaking openly, when we came up with that idea of Float, I had no consideration for what it took to build a company. I just wanted to build that thing and make sure that people were happy using that. And that was all that mattered. And then over time, and again, as your ambition changes, you start to take on these responsibilities as a CEO. And then you start to think a lot about what it takes to build a great company, the company you'd want to work for. And that's been just a fascinating journey and ask. I think, like for me, I've found that some of the most rewarding part of the journey is building this company and bringing on people and seeing them thrive. So I think that just requires a level of sort of curiosity and ability to sort of ask questions and figure out how things work and why people did what they did, and experiment, like try things, in the way the team is structured. And honestly, I think I've always had that sort of idea of just treating this as a sort of a learning experiment. I read a lot. I watch a lot of those interviews and read a lot of those sort of books, whether it be the early Basecamp story. You can pick up so much, particularly about company growth and the lessons learned through those references. And so I've definitely leaned on those, and fortunately a growing and very helpful community here in Melbourne.
Yeah, and I guess so much of a bootstrap founder can be a lonely journey. I know we've kind of spoken about that before as well when we were sort of both looking at launching communities within for B2B SaaS businesses. What are things that have helped you or kind of helped you retain that focus or kind of retain that core and also giving you that opportunity to learn from other people?
Yeah, this is something I think I've taken a lot more seriously in the last few years than I guess when we started out. I think when we started out, I was happy doing 8 hours of work, 8 hours of float, and 8 hours of sleep continuously, and you realize that's not sustainable. And I'm in my 40s now, and I've got a 3-year-old daughter. I certainly respect the impact that can have on your body and your mental health. And fortunately, I've started to surround myself with a lot of folks that are on a similar path or in a similar journey, and speaking to them about those challenges, which again, I think I'm very fortunate to say I have a co-founder in Lars that has been through this journey with me. I think I would struggle personally, having done these things sort of prior to, in not having that someone I could bounce those feelings off. Or honestly, it's not even a lot of conversations we have are not often a lot of sharing our thoughts. It's just about, sometimes I'll come into a meet with him in low energy or just feeling drained, and he'll be firing, and that just inspires me. And then, sort of the yin to the yang. And I think so much of, that journey and having that co-founder is just being about bringing sort of the strengths to your weaknesses, or the energy to when you're not, and keeping you sort of level. And so again, being incredibly thankful for that path, being on that path with Lars, but also just a lot more conscious of the fact this is a marathon, that you need to have that sort of energy, the health as a sort of foundation, if you want to get through this. And so much of our success is driven on that fact that you are there, that you're able to bring your best. And quite often, arguably one of the most important factors is that longevity.
Yeah, and just picking on something that you mentioned a little bit earlier, which is at the very early stages of a business, to be perfectly honest, you're just trying to keep the lights on for as long as possible, and you're trying to make sure that bills are paid and all of those sort of things. But at a certain point, as you mentioned, there's an inflection point where you can focus more on what does it look like to build a great company. What has that sort of evolution looked like for you in terms of what either what you think about or kind of what you focus on reading, or what you devote time and resources to when you think about building that great company versus at the start when you're just trying to keep the lights on?
Yeah, I think something you recognize with hindsight is there is two real stages of a startup or of a company: that startup and then the scale up. And they require a different set of skills, a different mindset, a different traits, different commitments. And I look back on that and note those two stages. That scrappy startup, that we did what we needed to do, we worked those mad hours. I remember I was the only person on customer support, and I'd go to travel and get a, alert at 3 in the morning that the site had gone down. I was just getting messages left, right, and center. That's what you did. And, we couldn't afford to have someone 24/7 on support. So you had that hustle, you had that mindset of just doing what you needed. Whereas I think, and I've noticed this even if I look back on those different stages, you then shift into almost this messy middle that you read often about, and this almost a trough of sorrow where that no longer gets you to that. And so the startup doesn't get you to the scale up, and you need to start professionalizing your work. You need to start thinking longer term, whether it be about your tech stack or who you bring on. You start to get out of this habit of trying to hack growth, or trying to bring on other people to solve your problems. And that was tough for us. I think we went through all those mistakes where we made the wrong decisions on tech stack or the wrong hires, or we tried to hack growth through sort of stunts and tactics that just weren't sustainable longer term. We went through all that, and particularly those years sort of 4 to 6, we learned from that, and then we start to get into this rhythm and this level of professionalism about how we grow the company, and that feeds on itself. And I think we feel, again, we know where we're going now because we've been through that journey, and we're really in the mode of scale up, and the mindset that takes.
Yeah, and I guess focusing on that in a little bit more detail, from a CEO perspective, what does that look like in terms of either what you spend time on day to day when you talk about professionalizing the operation a little bit more, or creating more I imagine what you mean is like more systems and things like that. What does that look like in action?
Yeah, for us, I think it was once we found that product market fit, when we realized and that's again not a binary place where you just hit it. It was an evolution, but I think 4 or 5 years in, where we knew we had a product that people were loving, that's when we should have shifted faster into this idea of the scale up, and shifting my role to less about the product and the everyday business as usual to, okay, let's try and build a foundation for a company that can sustain over time. And I think that took too long. And I think we, again, spent too much time in the noise of trying to hack growth. And again, growth hacking was a big thing at that time. So I was trying to, capitalize on some of those things. But the reality was, I think we would have been far further forward if we'd made that shift faster. And for me as a CEO, to step back and go, okay, maybe I'm not the best person to be thinking about marketing. Maybe I'm not the best person to be leading customer support. And there's something so rewarding when you make that decision and you bring folks on that clearly are better than you at that. Siobhan being one. I know folks across our team, again, that we've brought on and inspired me and brought so much to my blind spots and my lack of domain expertise that just lifts all boats. And so that, again, I say that 11 years in is something that it took quite a journey to get to and really understand and foster that sort of, again, that process and that journey.
As you mentioned a little bit earlier, the things that get you to a particular point aren't necessarily going to be the things that continue to move you forward and get you to the next stage. And, I've heard that, you went from a period of where no VC wanted to essentially invest in you to you getting a lot of inbound, calls and requests. Obviously, you've taken a little bit of money from Tractor Ventures as well, to my understanding. What does that sort of look like for you in terms of, the current state for Float, and as you sort of look at getting to the next set of milestones for the business?
Sure. Look, I think, yeah, again, fortunately, 11 years in, we can say, and we have Tractor as advisors, but certainly as options for future revenue when we need them, that you have optionality. And I think the longer you can go on this route where you have control over your decision making and the future direction of your company, that at the times where you want to either put the foot down or accelerate growth, that you can seek out folks that can help do that, whether it's financially or advisors, mentors, as such. And I think that's been a real turning point for us. Now that we want to put the foot down, that we can seek out the folks that will help us do that and feel confident we can do that too. I think asked me 5 years ago, I said no, like I don't know what to do with that capital. We're still figuring things out. I think we really do now, and so very open to those tools in the toolkit that enable us to do that.
As we've kind of mentioned a couple of times, the founder journey can be especially lonely, and especially when you're, a bootstrap founder and potentially don't get the same sort of level of support around you in the same way that you would potentially get through the portfolio of a VC fund. Do you have any advice for founders that are potentially going on that sort of bootstrap journey?
That FOMO is real. I don't know. I think VC does such a fantastic job of making you feel like there's a world of information out there that you're not privy to, and that's what it felt like. Honestly, I think in this journey, I think you felt like particularly early on, where you bootstrapped or you took the VC route, and if you weren't in the VC route, that wasn't the sort of cool club where actually big companies happen. I can say now, truthfully, that that's a completely wrong assumption. And if anything, we've been able to build what I would encourage is more sustainable long-term companies, and are proud to say we've done it that way. That said, I think you do need, and I wish I did this earlier, to seek out mentors, advisors, folks that have been there. I think so much of what you're doing has been done before, particularly when you talk about organization design and roles, and you think you need to invent a new role for every. Well, actually, no, this is actually a pretty well-worn route, particularly the scale-up journey, that you can learn so much from folks that have been there. And so I've been doing exactly that. I've had too many coffees now with folks that are in my community, and I love it, and I love every one of them. I take every opportunity to do that now, because you ask questions, you learn from their mistakes, you learn from their advice, particularly folks that have been there. And shout out to Tractor and Matt Allen in particular, who've done a fantastic job of making those connections, particularly here. It's amazing how many folks will give you that time if you ask the questions and show that genuine curiosity. I feel very fortunate for those that said yes to those coffees.
Yeah, absolutely. And I mean, the podcast is baked on how do you bring on people that have been there and done it to kind of share their lessons and do it in a more scalable way. But, as you mentioned, there's so much that you can get from, a mentor or advisor that can kind of really sort of dig in and sort of really understands you and understands the journey that you're on. I know that also for a lot of, especially for first-time founders that are potentially new to the ecosystem and don't really have the networks, the relationships in place, it can be really hard to find the right type of mentor or kind of really go about it in the right way. Any advice for anyone who's in that particular position and is potentially looking for a mentor in terms of both how to go about finding one, but also what does a great mentor look like for you, and what are some of the things that people should ensure to make sure that they're getting the right people on board?
Sure. It's a great question, because I think that the danger is you speak to folks that have come from a different scale in the journey or a different time in that journey. And I think the advice that someone gives at the scale-up phase is completely different to the I need to survive and just keep the train on the track startup journey. And I think I've made that mistake, or read books, for example, where the advice is so targeted at the VC route or the scale-up journey, and I can't apply those learnings, or I take the wrong learnings and apply them to a startup and try and apply those sort of growth tactics and processes that just fall flat or are inefficient. So seek out folks that are a couple of steps ahead in your journey, but not 5 steps ahead, and surround yourself with folks in that journey as well. I think there's so much you can get just from being surrounded by other folks that are going through similar challenges. Whether it be just come down to a co-work and listen in and feel out how other people are tackling your challenges. The more you can get involved in those folks that have been on these journeys and not necessarily as mentors, but just literally they're going through it, the more I think you'll just pick up on and feel like you have a better understanding of what you're going through. It's not unique. You don't have to do it alone, and you can share so many learnings from those that have literally done it. And again, that's been huge for me, both at the startup and at the scale-up end of the journey.
Yeah, I think your advice on finding people that are a few steps ahead of you is so key. I think there's often this temptation to try and bring on a big name someone who's built an incredibly large business, but chances are that they don't have a lot of time. And also, as you mentioned, maybe not the right sort of relevant advice for you given the stage that you're at the business. And there's so much that you can get from people, from surrounding yourself with a bunch of people that are maybe just a few steps ahead. I know for me personally, like I've had a lot of mentors or advisors. I've never actually had to ask anyone to be that. A lot of it is just a personal connection, and that's really hard to kind of engineer. A lot of it is just based on, do you click with someone, and do they, for whatever reason, are they willing to give up time and, listen to you when you've got a bunch of problems at midnight and sort of talk you through that.
It's such a great point. And so many of the folks that I would call mentors today are just relationships I've built up over years of conversations and giving a bit back. When I've ever been asked to chat with someone or an intro they've made to me, I've made time for those. And that comes around, and it comes around in different ways, in ways you didn't expect. I mean, when I first met you, Rohit, I didn't expect we'd be here today, and how fortuitous these relationships are over time. So I think if you do good, you give back to the community, you be generous with your time, and again, just show really specific interest in particular people for particular reasons versus sort of vague, can you help me? I think there's a real, a great cycle of feedback and improvement that you can build up over the years, and it compounds.
Absolutely. On that note, Glenn, thank you so much for coming on the show and for sharing your experience and insights. For anyone that wants to find out more, say hello, get in touch, what's the best way for them to do that?
Shoot me an email, glenn@float.com, or check us out at float.com as well. And you can follow me on Twitter, Glenn Float.
Perfect. I will make sure all of those links are in the show notes. Once again, Glenn, thanks so much for coming on the show. It's been a pleasure.
Absolute pleasure. Thank you again, Rohit.
Cheers. Thanks for listening to episode 165 of the Startup Playbook podcast. As always, full show notes from this interview will be available at startupplaybook.substack.com. For those of you watching the video version of this can probably tell there's been a change in background, and that is because I am currently in Europe. So unfortunately there won't be an episode next week, but there will be another episode in 2 weeks' time when I'm back in the country. Until then, if you enjoyed this interview, please don't forget to like, share, and subscribe, and I will see you in 2 weeks.